Hi, everybody. I'm Dale Pinkert. Welcome to FX Street's Live Analysis Room. We're going to be joined by the Super Bear, Harry Dent, today. Harry is giving away his book, The Demographic Cliff, which I have read and enjoyed. It's I think, an important read for people to take into account the demographic trends and influences over financial markets. And I sound like a broken record, but I think Canada is finally topped. Let's take a quick look at it here. I know I'm the boy who cried wolf, but we finally got to Alien's numbers, 4270, and we're just hanging on to the 50-day here. We diverged for the 1 millionth time. That was a 1 millionth divergence up there. We diverged on the 4-hour as well. Glaring divergence here. Glaring, man. Glaring. Glaring divergence. So if we get through 8.5, I came up with some targets. If we break here, next target is 40.50 and then 38.50. And then under 38.50, maybe 34.50. Here's your daily. And here's your 36. And here's your 38.50. Let me get some fresh fibs here. Probably pulling back to this 138 range. Crude's bouncing. So let's take it all the way down from here, some fibs. If today's the high. Halfway back, 35.40, 61.8 back, 33. So a step at a time, but I think we are topping here. It's very possible that the crude is turning as well. Have a little bit of a reversal day happening here. S&Ps are real strong. So possible reversal day in crude. And let me get the chat page up and say hello to everybody. There we go. Who's in the house today? Hello, Pipper, Alien, Fame, Adinda, Goldie, Beetle, Izzy. I see a new handle. Welcome, Billy. Sometimes when I do this, I feel like I'm the host of Romper Room. She used to say hello to everyone. Welcome, Billy, to LAR. Everyone make Billy feel at home. Alexandros, Fabian's back, Doug, Mauricio, M, Horace, Alien, Fame, and Adinda. How's everyone doing? So I think that's finally happening, don't you, Alien? We finally got your target. Alien told us about this number last week in Canada. I didn't think it would get up that far, but it did. I believe it was 42.70 to 350 was his number. High was 42.88, 42.68. Nice call, Alien. Everyone congratulate Alien for calling the high. So even a guy like Mike Golembeski, who's more famous than Alien, he was off by 80 pips and Alien nailed it. So everyone congratulate Alien for giving us a heads up on this level in Canada last week. Here's my thank you to Alien. We took out Goldie's level by about 60 pips. I'd like an autographed picture of you. So guys, if you're interested, you can get a free copy. All you have to do is pay shipping and handling for Harry Dent's book, The Demographic Cliff. Hi, Fab. How are you? Happy New Year, Fab. Hi, Izzy. I got a tweet from Ricardo. Okay. 4150. Looks like the 21 is right there. We could get one more push. I don't know, because crude looks like it's turning today. I think that was it in crude. So what else is going on, guys? I was thinking EG might be putting in a failing rally here. Tweeted about this, that maybe this is a failing rally in EG. Kind of a right shoulder that might be developing here. Figure this is like a neckline right here. So EG might be topping out. It's a pretty tight risk trade. You could take it with stops over the high, over 75.50. Just a possibility. Stocks are going to open sharply higher. Okay, Larians, let's go to work. What's the thinking in the community this morning? Hello, BW. Nice to meet you. Are you new? Okay. Any comments on my view on Euro Pound here? The Euro Pound may have peaked at 5.5, and this is potentially a failing rally here. Okay. Well, nice to meet you. Feel free, BW, to share your work. Show them how, hey guys, show BW how we do it. Although BW has probably witnessed it, seen it before. Hi, Goldie, how are you? Hope you survived that last push up in Canada. I'm not sure if M is a new handle, but what's the risk of welcoming M again? Welcome M to our community. Any views on Euro Pound? I'm thinking that we could be putting in a failing rally here. Any views on anything? How are you today, Fame? One more high, 76. Could be right for a third drive. Okay. Yeah, it could be. Could try it again. Thank you, Pipper. Hi, Doug. How you doing? That's what makes a market. A third drive would really be quite a ways up there. If you're counting this as drive 1 and this is drive 2, it's going to be off the chart. So that's why I think there's a possibility the high might already be in. Otherwise, we're heading up to above 76, 76.50. Yeah, that's what I'm thinking because of the pound. There's no divergence in the pound anywhere. But have this trend line drawn down here. We're close. Thank you, Alien. Haven't given the man award out in a while, but I've noticed a quality of persistence and never give up in Alien Ovicho. And I'm awarding Alien the Man Award here for having the courage to do interviews with us. And every day he's here providing us with great outlooks. FX Praise, how are you? It's been a long time. How have you been? Everyone, welcome FX Praise. I believe you were here a couple of years ago, right? I haven't seen your handle for a few years. Anyway, congratulations, Alien. You're the man. You're the man, buddy. You trade the markets, use wider stops so you don't get picked off. You don't use less leverage. You'll lose your head, your account. It will be dead. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. You don't use less leverage. You'll lose your head, your account. It will be dead. Use less leverage. Congratulations, Alien Ovicho. Hi, Sirik, how are you? I don't need this. Nice work. Yeah, that's what I was thinking, Goldie. Thank you, buddy. Goldie's got a couple of alternate paths here for Euro Pound. Pull back here and get another high. Where's the 78.6? Right here? Thank you, Goldie. Everyone thank Goldie for his views. And I stress the word views because he's got a couple of different views. We could pull back, retest the high, or just break from here. Thank you, Goldie. Insightful work. Alien's got a look in Kiwi. Okay. So this is just a little bear market rally in the Kiwi here. 40 pips and back down. Previous support becomes new resistance. Interesting look on Kiwi. Alien, thank you very much. I want to thank Alien for his look on Kiwi. Bias to sell the rally here. Okay, Goldie, did you find me? Thank you, Alien. Well, that's a great testimonial. Congratulations. Are you still contributing part of your profits to charity? See what my memory, how good my memory is? So you're sowing good seed. Are you continuing to share your profits with a charity, which I think is a great idea? So you could just call me Coach Pinkert. And that should give everyone else confidence. If FX Praise can do it, you guys can do it too. Glad for you. Glad for you and glad to serve. Glad to coach. Glad to be a sounding board. Glad to be glad. Oh, good one, Goldie. Did you follow me? I don't know if I saw your handle. You know my handle, right? Okay. Oh yeah, my handle's right there. You see my handle a million times a day. So Harry Dent, in about an hour, a little less than an hour, we'll be talking to Harry. Welcome back, FX Praise. So where do you hang out during market hours? You do it quietly in your closet? Hi, Josh. Josh is looking at some short-term stuff in the yen. 15 minutes. See what I see. Oh, okay, yeah. Back at 118. I think we'll get through there eventually. See what happens at 1760. Izzy has a screenshot for us. Euro pound. Okay, because we have a confirmed high here. Good eye, Izzy. Everyone thank Izzy for his Euro pound look. Daily. Looking for a pullback to under 75 in the 74 range. Thank you, Izzy. Okay. So I thought so maybe I was wrong. There you go. Everyone who was wondering, Happy New Year, Ricardo. I hope this is your best year ever in all ways, Ricardo. Not just trading, but in all areas of your life. Welcome back. How about a welcome back for Ricardo? I know you guys missed him. Here he is. Thank you, Izzy. Welcome back. Welcome back, Rick. Yeah, Goldie was asking about you. Your fans. I said Rick will be back. Rick will be back. You could check out, but you could never leave. Oh, okay. Now I remember you. Yes, yes, yes. Now I remember you. You're in somewhere in Eastern Europe. That's right. It's summer for you down there. Good for you, Rick. Smell the roses. FX Praise, I remember you now. You're a medical student. Canada's going to try and rally again. I don't know. Zurich, are you in Argentina too? Rick lives in Argentina. Did you go to the beach? I bet you have some beautiful beaches. Or are you landlocked? Argentina landlocked? Oh, that's right. So, guys, if you want to take a screenshot, you're not going to see this a lot. If you want to take a screenshot, you could do it right now. Forex Stop Hunter wearing a tie. Take a screenshot now because you're not going to see this often. Go ahead. Dale in a tie. Gordon Gecko is with you this morning. I'm Dale Gecko. Wake up, Bud Fox. Just made 500,000 in Hong Kong gold. And greed is good. This is your wake-up call. Dale Pinkert wearing a tie. Everyone get that screenshot? You're not going to see that too often. Oh, I've heard of that. I've heard of Punta del Este. I'm married. I'm married, Happy. I'm happily married. Yes, I have a hot date with my wife. Just in case the interview goes viral, I thought I'd look professional. Yes, it is. We have a bromance. I have a bromance with Harry Dent and Martin Armstrong. I don't know which one. I'm conflicted, Abel. I don't know which one. I don't know which one I should really ask to go steady. You know me so well, Abel. Luimo. Yeah. How did it feel? Did you go through withdrawals? So you didn't bring a laptop with you or anything? Happy New Year, Luimo. Here comes dumb Canada again. Oh, yeah, you showed this the other day. It's like a relative strength meter that Luimo's using. It's a good tool for people that are new in the business to get an understanding of relative strength and relative weakness. Thank you, Luimo. Yeah, threesome. It's gonna be it's gonna be a threesome. I hope this is your best year ever in all ways, not just materially, but in all ways. My trading warrior brother, Luimo. Everyone doing all right? Everyone doing okay? Hello, Pegasus. Happy New Year to you. Alexandros, how are you? What are you thinking? Hi, Josh. How are you today? Horace. How are you, Horace? So here comes Canada again. Maybe it's going to make another run for a third drive, huh? Quick long and Euro 5-minute chart. So everyone thanks Cyril for his scalp look here. Looking for maybe 108.90. Nice looking harmonic here. Thank you, Cyril. Everyone doing okay? Everyone thanks Cyril. 147, 42.70. Okay, thank you, Rick. Here's Rick's S&P. So this is a rally to sell in the S&P, looking for the lows. Suggest below 1840, maybe back to 1960, 70. Thank you, Rick. Yeah. I covered my VIX longs Friday a little early. Thank you, Rick. So is crude giving it up again? Yeah, crude's giving it up again. Everyone doing okay? Yeah. Aussie so far looking like an ABC. Gold under pressure. Okay, the charts are starting to fly here now. Here's Cyric. 15-minute gold for a buy. So Cyric's 15-minute work favors a weaker dollar, a pop in euro, a pop in gold. And Rick's got this Aussie yen. Wow. And all we did was rally back to the breakdown. That's a big, big call. Thank you, guys. Thank you, Cyric. Thank you, Rick. That's a big call. So we got back to the previous bottom here in crude. So this is kind of an important area, that's 33 level, right? We get back above it, then maybe it's doing something right. We could get back to 34 and get within the wedge. I'm going to take a quick break. I'll be back in 5. Thank you, everyone, for your contributions so far today. I'll be back in about 5 minutes. Just going to get a warmer in my coffee. You guys could continue to share links, collaborate, even when I'm away. Be back in 5. I'm back, Adinda. All right, you made some money. You never go broke taking profits, Wemo. Rick's looking for a little bounce here at major support in the pound. Great to have Rick back, isn't it? We take this out. We're going to 130. Thank you, Ricardo. Everyone else doing okay? Any other new handles in here today? Hello, Carlos. Fabian, how are you? Happy, how are you? Finally getting a little selling here in Canada. Finally a pop that was rejected at the 21 EMA on the hourly. We take out the 50-day on the 1 hour, and Canada will look pretty vulnerable, trapped between the 21, which is the red EMA, and the 50, which is the blue one. Give me a Y if you see this candle trapped between these two MAs. Whichever way it comes out of this will be the next 30, 40 pips. Give me a Y if you see it. You don't have to agree with me, but that you see this candle looks significant to me. It's caught in the mouse trap. Caught in the mouse trap right here. We get through it. We're going to head up for a third drive. We take it out. We're headed down towards 141. How about up towards 148, 149 in the pound? Everyone doing okay? Hold on a second, everyone. Oh yeah, I won the Powerball. Just wanted to let you guys know I'm retiring. That I won the Powerball, 1.3 billion. I won it. Everyone doing okay? I can't fool you, Goldie. What do you think I would do if I won $1 billion? Trade or relapse? Great philosophy. Aim small, miss small. Great philosophy. What do you think I would do, Goldie? Take a little time off? Go visit Rick in Argentina? Yeah, Pontiac Fiero. And maybe go see Abel in Barcelona, Rick in Argentina. I would just go visit everyone all around the world. What do you think of crude here, Rick? Use more leverage. Yeah. I think I think there's going to be a short squeeze. You think I would use more leverage if I had $1 billion? I don't know. All right. It'd be my treat, Carlos. It'd be my treat, buddy. I'll pick you up in my private jet. Oh, yeah, where's it being played this year? In Arizona? Yeah, I'd be very busy. Sounds like fun. Okay. I think I'd take a break from trading and decompress. I'm not saying I'd never trade again, but I think I would take a break. Yeah, get a new stereo. Oh, San Francisco. Wow. Is that a new stadium? That's close for me. All right, I'll meet you there. I'll meet you there, buddy. Amro is selling me. Amro is sending me a new coffee cup. Did you guys like Amro yesterday? Ed Matz may join us tomorrow. Then I have Peter Goodburn on Thursday. A lot of great content from our guests this week. Be good to hear Peter Goodburn's stuff. I haven't talked to Ed Matz in a while. Is this crude? I'm just guessing you think we could get back to 38. Oh, wow. Look at this. This is a lake. Beautiful, man. Nice. Living the dream. Ricardo Dinger. He's got a beautiful family to enjoy it with, makes it even better. Thank you, Rick. Nice. Yeah. Not with the size you're trading, is he? Not with the size you're trading. Let's shoot for 10K this year, all right? 10K. Oh, look at that. Everything. Let's walk before we run. Thank you, FX Praise. Nice pound short, pound Aussie. Congratulations. Everyone congratulate FX Praise on this trade here. Pound Aussie. Nice work, man. Nothing wrong with 300 pips. Is there an FX VIX? Is there a VIX on FX? I didn't know that. $150, Rick? 150. 150 is my guess. 150. I read your mind. I knew what you were seeing. 150. Thank you, Rick. I agree. So it's just finding, we get a rally in the pound to 49, that'll be a chance to put it on. I concur. Goldie shorting Aussie here. 70.17 right here. Thank you. Thank you, Goldie, for sharing that. Stop and target. Everyone doing all right? Like to see some kind of rally back to 77 or so. Hi, Tosin. How are you? Happy New Year to you. Happy New Year, Tosin. I hope this is your best year ever in all ways. Everyone, welcome back, Tosin. DZ Vista's in the house. Hello, DZ. I hate when that happens. Tosin's a regular now. Everyone doing all right? You guys love me? Did you miss me when I had a week off? Congratulations, Tosin. Pull some money out of your account and go enjoy yourself. Go give some money to some homeless people. Starting to love me? That's a people either love or hate me. It's one or the other. Not many people are neutral about me. Thank you, Goldie. Okay. Or at least a pullback. Very nice look. 15-minute look on Aussie from Goldie. Don't fade Goldie. Got a very good hit rate. Thank you, Goldie. Anything to read? You know, I haven't put together a course on it. But if you go over the videos, the daily videos, I talk about it a lot. And if you hang out, you'll get it. Anyone want to explain? Why don't you Google it? I'm sure there is. I didn't invent it. So why don't you Google it? I'm sure there are. I think J.R. Hill came up with it. I think that's who I learned it from. So Google 3 drives to a top, 3 drives to a bottom, J.R. Hill. Let me know if that anything comes up for you. You're welcome. Oops. Aussie. Okay. Yeah, maybe one more low. 1, 2, 3. Probably diverge if we washed out one more time. Thank you, Goldie. Did you find something on baby pips? Free drives? There you go. I don't know if it's the same. A, B, C, D. There you go. Ask and you shall receive. Thank you, Alien. Nice. So Canada looks like it wants to push up again. About 10 minutes away from Harry. Here comes the dollar again. Yeah, Izzy took the course. Yeah, what do you have? Yeah, that link didn't work. No, Tilson, something wrong with that link. Here comes Canada again, getting through the 21. Yeah, 25, I know. I was thinking we might get a bounce before 25. I could be wrong, though. Yeah, yeah. Where's this come in? The purple. Where's the purple line come in? Just curious. Can you tell me where that comes in? The yellow and the purple? Sure looks like a third drive, but could collapse. Curious about the yellow and purple moving averages. 47.70. Okay. How about the yellow? Oh, I missed your screenshot, Izzy. Yeah, right through the channel. Thank you, Izzy. S&Ps are coming off quite a bit. Yeah, it's going, gone. You mean to the upside? Yeah. What's the price? 40.30? Okay. Dollars rallying. Stand by for our interview with Harry Dent at Economy and Markets. 107.5 you're looking for? Okay, well, I was wrong on Euro. I don't know. We'll see. Pound's still acting crummy. Okay, take out the NFP low. Yep, new high there. No, Canada hasn't done it yet. So stand by for Harry Dent. Harry should be joining us shortly. Stand by for Harry. Link has been sent to Dinda. You could instant message me here. Okay. So you just move between this screen that you see for me and Harry's headshot. Okay. Just waiting for the author of the demographic cliff. We'll get an email for you to request your copy. Harry Dent is offering it free. All you have to do is pay shipping and handling. It's a great read. I read it a year ago. So just stand by for Harry. Stand by for our interview. Should be here shortly. Everyone doing okay? Okay. Should be here. Let's see if I have any emails about it. I don't have any notices, so I'm going to stick around. And just like we have to be patient in the markets, we'll be patient for our guests that take the time out of their day to edify us and share their views. What email address did you send it to? Okay. Okay, I'm going to send an email. Looks like I'll have to send an email. Everyone doing okay? Maybe there was a mix-up with the time. S&Ps are fading pretty good. A lot of people sold into that rip. Right, Stephanie's trying to contact him. Everyone doing okay? I'm going to go see that movie. I can't play music on YouTube anymore, Louima. Thank you, FX Street Video. Everyone doing okay?
That's okay. This is looking better.
Hello, Harry.
Oh, hi. Okay.
Hi, Harry. Thank you so much for joining us today, everyone. This is Harry Dent, author of The Demographic Cliff, editor of a free newsletter, Economy and Markets. So, Harry, welcome back to FX Street, talking about cliffs. We certainly had something falling off a cliff last week, Harry. I was thinking about you every time we have downdrafts. I get your regular emails, and I admire your conviction and having stood through a lot of interviews where people actually kind of castigated you for your views, and it's amazing how the world can change. You're a warrior, Harry, and it looks like we're finally underway for this phase. You've sent me some charts for us to pay attention to, about 4 different charts, so I have them up on the screen. Welcome back to FX Street, Harry.
Yeah, nice to be back, Dale. First, let me just introduce real quick. I mean, our biggest thing has always been demographics. We saw the downturn in Japan coming in the late 80s when people thought they were going to take over the world, and with the same projections of when the baby boom generation was going to spend money or not increasingly, we were able to project that this boom would last into 2007. But ever since, it's just been nonstop quantitative easing and stimulus and zero interest rates, short and long term. So we're in an artificial recovery, and we would have been in a depression. We were starting to see a Great Depression in late 2008, the total meltdown of the financial system, and they just poured trillions of dollars around the world to stop that from happening. That does not solve the problem. So,
it's amazing it was amazing it was that simple, Harry, that, all this time we've been looking for signals, etc., on topping action in the S&Ps, and really all we had to do was just sit back and wait for the Fed to finally be in a corner and just move once. And it took a week or so for the effects to start to show up, and I know you've been very bearish China. So this is not, the first 3 days of last week was the worst start of a year since 2008, and you tack on the last 3 days, it's the worst start to a new year in modern stock market history. So I know a lot of people place a lot of importance on what happens in January, so goes the rest of the year. So why don't we start out with your first chart? This isn't a bubble with a question mark.
Yeah, I mean, the biggest argument I get when I get on these shows is I'm saying, hey, we're in another bubble, and they say, well, this isn't a bubble because of this, or this isn't a bubble because inflation's not high, this isn't a bubble because stocks are not as overvalued as they were in the tech bubble. And I'm like, well, Amazon is. And you can't expect this bubble to be as overvalued because that boom happened when baby boom spending was in its strongest decade, which only we forecast in the late 80s and early 90s. And we had a perfect geopolitical environment with nothing wrong in the world. Now we have everything going wrong in the world. So, but I keep throwing up charts like this, and I've got dozens of these. Every bubble in history goes up, and it starts going up more exponentially, and then it bursts. They don't ever correct. When they finally hit a certain critical point, they burst. It's like, you know, the straw that broke the camel's back, because they kill themselves from their own extremes. And so here I show, you know, if I'm debating somebody, I'd say, well, you do agree that late 94 to early 2000 was a bubble, and everybody say, oh, yeah, that was a bubble. Well, here's the S&P, the red line today, versus that bubble back then. The only difference is this bubble's gone even higher and lasted a little over a year longer. So this is a bubble. And I always tell people, I don't care what causes a bubble, whether it's an OPEC embargo or some supply shock, or whether it's excessive demand like the baby boomers coming into coastal cities and pushing up stocks and real estate and things around the world, or if it's just government stimulus. This last round has just been nonstop government stimulus around the world, and that money hasn't gone into lending and expansion because we already overexpanded in the boom. So this is a bubble, and bubbles burst. And if we look at the second chart, this is a chart I've been touting for over a year now. Each bubble, we've seen three bubbles: the one in early 2000, the one in 2007, and now in 2015. Each bubble has taken us to higher highs, but then when they crash, and they always crash, as you can see, they take us to lower lows. So my projection, and this is just the best projection I can make here, is that we have seen a top here in mid-2015, and we're going to have to go down in the next, say, year and a half or so, kind of like the 2008 crash, and go down to even lower lows, around 5,500 to 6,000, which means this next crash is not going to be 55% like the last one. It's going to be 65, 70% or more. So this is definitely something that investors want to get out of the way of. And I'm also saying it's the final bubble in this pattern. We saw the same thing when the last generation, the Bob Hope generation, was peaking in their spending in the late 60s. We saw a peak in 65, a crash. A higher peak in 68, a bigger crash, and then the final high in late 72, and then the big crash, 73 to 74. That was the final bubble. That was the final crash. And that was the one you really needed to get out of the way of. So most people are looking for a correction here if they're smart. And 9 out of 10 Wall Street analysts I debate aren't even looking for much of a correction. If you don't expect at least a 20% correction with stocks so overvalued and have gone so long without. And then next chart is also an important one that I don't hear anybody talking about, even though it's kind of obvious. I call it a rounded top. Yes. Into May of last year, we kept barely edging up the new highs. But ever since then, the geopolitical news just gets worse. The fundamental news around the world, again, we've been focusing on China's bubble is bursting and they cannot contain it. I don't care what anybody says. Nobody can keep a bubble going forever, especially the Chinese bubble so extreme. Germany has the demographics as bad as we saw for Japan in the 90s, and they're supposed to hold up Europe. And oil prices keep collapsing. Another thing the Federal Reserve and central banks can't control. You can stimulate your own economy, keep your own financial institutions awash with money and speculation, but you can't stop global oil and China and stuff from crashing. So we're seeing now every attempt to rally cannot make a new high, and that's very bearish. And we're coming on a critical point just below where we were on Monday, around 1880. We would break what I call here, and just to keep it simple, a head and shoulders pattern. Left shoulder, you see S, head peak, and then a right shoulder. This is a very bearish pattern, and it's very consistent. One of the most consistent patterns. We break 1880 in the next couple of weeks, and we're bouncing right now, and we're oversold. That would be the next sign of, hey, this thing is going to start to break down a lot harder. And again, that might take days, that might take weeks, longer, but that's the key place I'm looking for now to say, okay, I am convinced now we have topped. And a final reason, if we look at our final chart here, the everyday stock, you know, I've got the value line geometric index here, which is very simple. It's a broad index of stocks, unlike the Dow or even the S&P with just 500, and it is equal weighted. Every stock is counted the same. So these markets have been dominated by what they call the FANG stocks, Facebook, Amazon, Netflix, Google, and Apple, and all these sort of things. And they dominate the market because the markets are weighted for their huge capitalization. I just showed yesterday in my newsletter that Amazon has 870 times earnings right now, and people are still piling into it. So if you look at this blue line here, the broader stock market's already in a bear market, down 21% recently. When the broader market, when the S&P and Dow are only down like 10%. We are already in a bear market, and when you get this big a divergence between the everyday stock and the large caps, that is the classic sign, along with the against decline line, which also measures this. But I use this chart because it's simpler to understand. That's the classic sign that the bubble or a major bull market is finally peaking. The dumb money is piling in, buying the brand name stocks that everybody knows, and the smart money that buys better value and small cap stocks are leaving. And so this is a sign. I am convinced we have seen a top. We're due for a rally here. I'm telling people this market is a sell on rallies, not a buy on the dips. And these traders that keep buying on the dips are just going to keep getting punished, and you don't need to be one of them.
Harry, you're an expert in the bubble arena. In most arenas, most bubbles do retrace around 70–80%.
Yeah.
So I was going to ask you, did you find this top unusual in nature? Because usually Wall Street doesn't give people a year to put on a position. Bears to be getting short of constant failing rallies up against major resistance. Normally it's some type of spike blow off rather than a huge distribution top like we had last year. Did you find that unusual?
No, because we've been going. Yeah, because this is different. The 94 to 2000 bubble, we call that in advance. Again, the strongest spending of the entire baby boom wave of spending from 83 to 2007, which you can project very easily for peak spending, and again, a perfect geopolitical environment and falling inflation. All things we can predict on our cycles, our long-term cycles. So that was the perfect thing. That was a classic, even more exponential bubble with even higher valuations altogether. Well, the 2007 bubble that followed had bad geopolitical trends. It was not as strong, and it had more of a rounded top like this, and now this is the most rounded. The reason this top looks different is that it's purely from artificial stimulus. Without the endless QE around the world and zero interest rates, and Dale, it's not just zero short-term rates. When you adjust the 10-year Treasury for average inflation rates of 2% in the last several years, it's zero today. Even long-term money is free. So this is the only thing that's kept the markets going, and the markets keep believing, well, the Fed won't let the markets fall. Well, they're going to be disappointed in that, so they keep, that's the point of this rounded top. They keep trying to rally and do the same old thing they've been doing for 6 years now. And because the fundamental trends are going against them, the China market keeps cracking up, oil keeps going down, Europe keeps having more and more problems. Now they got 3 million refugees to deal with on top of everything else. The fundamentals and the geopolitical trends, as we've been predicting, will continue to go into this market. Most economists and investors are thinking, hey, if we can just get over this 2008 crisis, we'll hit escape velocity and everything will be hunky-dory. We're like, no, the fundamental trends get worse. So this market's going to keep fighting this until something bigger goes wrong. And I'll tell you the biggest thing, Dale. I am looking at the Chinese market going to new lows. It crashed 42% in 2.5 months, just like the U.S. in 1929. The U.S. stepped in and bought its own stock market like China did today. That lasted about 4 months, and then the whole thing caved. China breaks down to a significant new low. I think that's when this thing blows. Not going to happen.
People can't have it both ways, Harry. After the financial crisis, they said China was going to be an engine of growth that helped our recovery, and they can't have it both ways, that if China's imploding, it's not going to have an impact. In fact, people are saying that China's going to export and is exporting this deflationary trend across the globe. I wanted to ask you, where would this count or this view be invalidated? Because in your readings, you did offer an alternate scenario last year, that we could just pull back 20% and then get one more hurrah in the market. So if we do pull back 20%, is there still a chance, or is that off the table now?
No, that is still a possibility. It's looking less and less likely now because, again, the trends just keep coming in against the market. Now we got earnings seasons coming, and earnings you went down in the third, fourth quarter of last year for the first time in a long time as well. And normally the stock market would already be down more than that because of this. So that's why I'm looking at that pattern before. If that head and shoulders pattern works out, that projection would be about the 1595 on the S&P 500. Let's call it 1600. That would be 25%. That would be more than a normal bear market. And that, to me, would be the sign that this bubble has peaked. Until that happens, there's still a chance that we could see one more rally to slight new highs. And to me, that would be even more bearish.
That would be a gift. I would love to see that, Harry. You know, I know your mission is. I know your mission is.
That's why I don't think we'll see it. It would be too good.
Yeah, for people to say, well, I'll just wait for one more high. They'll be waiting the rest of their lifetime. I know your mission is capital preservation for people, Harry. You don't want people to have to live through what they have twice before with financial panics in the market. And a lot of people, and I follow what you say, are hanging their hats on, they believe you're right about what could happen to equities, but they're hanging their hats on the gold market. And you are just as bearish gold as you are the market. You're talking numbers down the road, 750 and even an extreme of 250 in gold down the road during this deflation. So I know that's also part of your mission, because people that are called gloom and doomers because they're bearish stocks, most of them are bullish gold. So I want you to just inform our public that are going to coin stores and burying Krugerrands in the backyard that may not save the day for them, and why.
Yeah, in fact, it definitely won't. We've been saying this for years. It's not a recent forecast. And I've got so many bets with gold bugs, you can't count them. And I'm winning all of them. There's a couple of things people need to understand. First of all, like I always show the bubble, gold was a bubble. I was debating Peter Schiff in St. Kitts, and he said, all these things are bubble, bubble, bubble. He said, but gold's not a bubble. I'm like, what? It went up 600-700% in 10 years. If that's not a bubble, that's worse than the stock bubble we've seen in most other bubbles. So it's a bubble, number one. Number two, gold is misunderstood. It is not a crisis hedge so much. The worst crisis we've seen in the world in the last 10 years was late 2008 when the entire financial system was melting down and gold went running for mommy because we saw a brief bout of deflation. Gold is an inflation hedge. We got charts back hundreds of years. When you adjust for inflation, gold goes nowhere. In recent times, gold went up with inflation in the 1980 and crashed with that commodity bubble, and it went up again, especially when they saw all this quantitative easing. Gold thought at first quantitative easing is going to cause massive inflation. We said no. These central banks are merely using a fire hose to fight deflation. Deflation is the trend. That's why you don't want to be in gold. And the third reason is gold is a commodity. It's no longer money. Try to take your Krugerrand down to the 7-Eleven and buy some bread, damn it. You're not going to be able to do it.
You can't eat it.
It is a commodity, and the commodity cycle is something we've also been warning for years. Peaks on 30 years like a clock. 1920, 49 to 51 double peak, 1980, and then a double peak between 2008 and 2011. Commodity prices have led this whole downturn because they're responding to the slowdown in China. China consumes 40 to 50% of most industrial and energy commodities. So they're the 800-pound gorilla. They overstimulated, overexpanded. Their balloon and bubble is bursting. Commodity prices are not coming back anytime soon. I think gold's going to be at 700-ish within a year and a half, by mid next year at the latest, 2017. And I think it's ultimately going to bottom somewhere between 250 and 400, because I'm doing the same thing you did before. And you're exactly right when you say most bubbles collapse 80% or more. Right. So gold's got to go back down to 250 to 400 to erase that bubble. It's not erasing all the gains throughout history, just the bubble. Real estate in the U.S. has to go down 40% or more to erase the bubble.
I sold my house 2 years ago. Always early, Harry. Do you know what that's like? So,
I know what it's like.
but, and you know, you're interesting. Yeah, and your interesting point about real estate is that people die, but houses keep living on.
Exactly, and that's unique to real estate.
Okay, so I'm here in San Diego. We've taken out the '08 highs on the coastlines here, Harry, and a lot of it's been Chinese money coming in here, buying $1 million homes for their kids to go to college in.
Yeah.
So if the
and they're doing that to launder their money outside of China. That's the only way they can legally get their money out of China. They are running from their own country.
So what's going to be the catalyst for another leg down that we never retrace the real estate bubble 70–80% after the '08 financial panic led by housing? What's going to be the catalyst to take it down this time? Is it just weakness in asset classes that people have to sell? Or again, is it the demographics? There's no demand? Because I've read that there's another generation, I don't know if it's X, Y, Z, I'm not sure what letter, that actually, it's Y, that the demographics are actually okay for them to come in and buy houses, but perhaps they don't have the means because they're saddled with student loan debt.
It's partly they've seen a real estate crash early in their life, which the baby boomers never saw. We never thought real estate would go down as a generation. It's more importantly what you said earlier. It took me years to get this. I was looking for Japan had their bubble burst in real estate and stocks way ahead of us because their baby boom peaked into and just after World War II, way ahead of ours in the early 60s. So they had their stock bubble burst. They had real estate burst. Well, when their next generation, the millennial or Generation Y came along, I was looking for some sort of bounce. Well, we didn't get it. Real estate's still down 60% and went down way more than we've seen. And the reason it didn't bounce, I finally figured out when I saw a quote that said that the Japanese are selling more adult diapers than baby diapers. It clicked for me. Oh my gosh, old people are dying and old people are sellers. And like you say, housing lasts forever, unlike most consumer products. So what's happening in Japan and what's going to continue to happen in the United States is the dying of the baby boom generation over 20, 30 years to come into 2039 actually is going to cause net demand for housing to keep going down, and it will turn negative, you know, maybe several years from now, and we'll actually won't need any more homes forever. So how is housing going to have a strong bounce back, or how's it going to keep going up even with this new generation when we've got this sort of dynamic?
So will interest rates play a role in this at all, Harry? Bonds are still pretty sanguine, but they're not acting that great compared to what I would have expected after last week on the flight to quality. The bonds really didn't perform that great. Will interest rates play a role in real estate coming down?
Well, you know, often in the early stages of a crisis, interest rates can bounce up, and I think it'd be more international. You've got unbelievably low interest rates, 22 basis points on a 10-year Japanese bond when they're bankrupt, you know, 56 basis points on a German 10-year bond, and they're about to go, you know, slow down unbelievably and have huge debt crises in Europe. So there's a kind of a realignment. Even Italian bonds, I mean, they're almost bankrupt, and they're only yielding like 2% close to our bond. This shouldn't be. So there may be a short-term readjustment in rates, but the U.S. Treasuries, as a general rule, are going to, after maybe spiking a bit in the next several months, they're going to head down for many years. From late 1931 into 1941, Treasury bond yields went down even lower, like to 1% to 2% on long-term bonds, even though the worst of the deflation happened in 1933, because investors just started seeing a shift from, oh gosh, we used to think inflation, now we got to look more for deflation. So that's a positive for housing. That's a positive.
And I'm going to go ahead.
You know, but with more people buying than buying, there's no way to offset that trend, even with low interest rates. I mean, interest rates are low now, and housing's not doing well.
Am I assuming correctly with your view on gold and deflation that even though the dollar has taken a pause and moved sideways since Draghi disappointed a few months ago, that you're looking for a resumption of the bull market in the dollar? And do you think this will be the year that we see euro under parity?
Yeah, yes, we've been looking for euro under parity for a long time. I think it's going to happen in the next couple of years. The biggest thing we see, Dale, is the dollar went down 58% in the Great Boom from 1985 to 2008. It has been bouncing ever since. All these gold bugs say, yeah, gold's going to go to $5,000 to $10,000, dollar's going to go to zero. We're like, no, no, we're the best house in a bad neighborhood, and we created far more dollars here and around the world than euros or yen or yuan or any other currency. And when we have this big shakeout in debt and asset bubbles, which literally destroys money near permanently for many, many years or even decades ahead, debts get wiped out. Bubbles burst. This is money that disappears, real money that people were planning on spending and accumulating. Then the more you destroy a currency, the more valuable it gets. That's the paradox the gold bugs don't get. The dollar has gone up since the beginning of the crisis in January 2008, since the first recession began, and whether we've been in downturns or upturns with massive printing, the dollar has still gone up. It's 40% higher than it was in January 2008. I'm just seeing the dollar rebalance, and I think that rebalancing could happen by sometime in 2017, and then I'll become more neutral. But I still see 20–30% upside on the U.S. dollar, and I see almost every other currency, including the venerable Swiss franc, which has been collapsing, going down, and that's been the trend. Dollar was down from 85 to 2008. Most currencies were up, and ever since 2008, most currencies are down, and the dollar's up. It's a very simple formula. The dollar is the safe haven, and when gold was down 33% in the second half of 2008 and silver down 50%, the U.S. dollar was up 27%. If you want to protect your money, keep it in U.S. denominated securities. If you're a foreign investor, have your money in U.S. denominated securities to get the dollar play.
So I believe it's a great service that you're providing should this crisis unfold, Harry, and it's a wonderful thing to sidestep a financial panic, and even a greater thing to capitalize on it. But with this scenario unfolding, I believe there's going to be a lot of social unrest. There's going to be a lot of tension in the streets, a lot of people. We already have invisible breadlines. It's going to be tough in the U.S. for a majority of the population. So there's potential of bail-ins. So it's one thing to protect your assets, another to increase them. But what do you do to protect yourself against a lot of the draconian type measures that may come to pass as a result of this financial crisis?
Well, you know, the number one thing is cash and cash flow are king. If you can turn real estate or stocks or any financial asset into short-term liquid cash-like, you know, safe short-term bonds, you're preserving your money while bubbles are bursting, which means it's increasing in value enormously versus all other financial assets. So that's number one. Sleep at night, be out of the markets, and wait for different bubbles to burst. And they're not going to all burst at the same time. Real estate's going to take much longer to burst and happen slower as a general rule than stocks, just like last time around. The number two thing is you can actually take part of your portfolio and just be short things, short gold. Gold is bouncing now. We've been predicting this too. But if it gets up to about 1,300 or something, I would short gold. You can short stocks on any bounces here. Just have some that can say, look, if things go down, I'm going to actually make money and not just preserve my money. And third, you know, there are people who have proven trading systems. We have some of these at Dent Research. I don't do them because I'm not a trader, but people who can go long, short, who can play volatility. So you have those three choices depending on your risk tolerance. I advise most people sleep at night. So just sidestepping the bubble is going to put you ahead of 99% of people in this country who are going to get wounded badly, and next time we're not going to come back to new highs. That's my forecast. Just like after the 73-74 burst or the 1929-32 burst, we didn't get back to new highs, you know, for 25 years after those major tops. So this is the time to say, look, I'm going to at least suspect that we could have a volatile period ahead. So I'm going to get out, and hey, if we don't see something happen the next year, then you can question what I'm saying. But I think this 2016 is going to be the next 2008, as I showed earlier. But it's going to be a more dramatic drop and in a similar period of time. So you really want to get out of the way of this.
So what's everyday life going to be for us to go to the grocery store and with this type of crisis hitting the U.S. and the globe, don't you believe that life will not be the same? It will be different this time. And a lot of people are considering havens and sanctuaries that they'd rather watch it on TV than be in the middle of it. Do you give any thought to that, Harry?
You know, I do. I tell people, look, it definitely. I'm the most worried about China because they've got 500 million people and with no skills, moved into cities, building stuff for nobody. When that musical chairs ends, they are really in trouble. U.S. has very polarized politics, the worst income inequality in the developed world. That's not a good sign. This is not a time to go driving up to the 7-Eleven in your Ferrari. You got a Ferrari, sell it and get a Volkswagen or something.
Go low profile.
Yeah, go low profile. Don't show off your wealth. Protect it, but don't show it off. And I own no real estate except for my safe haven. I've got a safe haven in the Caribbean that is getting more favorable zoning, number one. But number two, it's my place to go if things get really bad. And I, like you say, want to be watching it from afar. I've been told people in my books for years, where you live is as important as protecting your assets. If you have a choice between being in the outer exurbs of a city like I am in Tampa, that's better than being downtown, you know, or in the main or denser areas. If you can be anywhere between the two mountain ranges, Rocky Mountains and Allegheny Mountains, you know, in the middle of the country, less of a bubble, less carnage, that's better. If you can live in a small town that maybe got a university or something and a good standard of living and plenty to do, that's the best. So where you live, because I don't know, this is kind of unprecedented. I don't know how bad the civil unrest is going to get, but there's got to be a good bit in the United States, given the polarization of the left and the right and the rich and the poor, and the most guns per capita of any developed country in the world.
Thank you for sharing that, Harry. Who's going to win the presidential election next year?
You know, I'm not commenting. Well, first of all, I don't endorse candidates. I stay apolitical because we want everybody to benefit from what we do. But what I do say, and remember, Barack Obama came out of nowhere, and I mean nowhere, and beat the favorite candidate, Hillary Clinton. I think if stocks collapse this year, as I expect them to, and the economy goes into a deeper downturn, it's going to favor the outliers. It's certainly, Jeb Bush is already dead, and Hillary Clinton still looks supreme, but I think that could change. So, and you can't count out somebody new stepping in, especially on the Republican side. So we'll see. I think we won't know till we get very close to the primaries in July for both parties, and then it'll be more obvious. Right now, I think anything can happen, but I do favor the outliers, and it's certainly looking good for Trump on the Republican side.
Thank you so much, Harry, for your time today and edifying our community. Just like your megaphone formation, this was your third appearance, like the third top on the megaphone. And also, thank you for offering your book, The Demographic Cliff, to attendees. And all they have to do is pay $4.95. You sent it to me after your first visit, and I found it very informative. And again, Harry, it's always a pleasure to speak to you, and good luck on your mission, and let's try and save as many people from heartache as possible going forward.
Yep,
thank you, Harry S Dent.
Thank you, Dale.
Great having you. Everybody, thank Harry for his time today. Good hunting, my trading warrior brother.
I'm not really a trader, but boy, this would be a damn good time.
Okay, the community is thanking you, Harry. So have a great day, great weekend, and let's get in touch down the road, see how things are unfolding.
Okay, thanks again, Dale.
Okay. Everyone doing okay? Canada's rallied to new highs. Still diverging. Euro under pressure. Okay, that may be. Okay. Oh. Well, I'm not going to be able to do a wrap up. There's another show coming up, everybody. So I'll skip the wrap up. Mauricio and Adinda have to prepare. I think there might be one more high. Okay, Mauricio says I can do the wrap up. Okay, so Euro USD looks like it's going to challenge this 108 level. Dollar's acting strong. Pound making new lows. Euro pound's probably going to make new highs. You're welcome, Izzy. Looks like whoever was waiting for 76.50 to short the euro pound is right. Canada is still diverging for the 1 millionth and 10th time up here. We still have a non-confirmation here. Aussie, Goldie shorted the Aussie. I think it's working for him. Nice short. Nice short. Goldie. Looks like the dollar's going to rally and we'll head down perhaps for one more low. Ricardo just bought the pound at 143.58. Great to have you back, Rick. I want to thank everyone for their collaboration and their contributions today. I want to thank Rick. Great to have you back. Steve, Cyric, Izzy, Goldie, Happy Pips, Luimo, M, Josh, Abel, Tolson, Alien, FX Praise after 2 years dropped in. Forex Stop Hunter, DZ, BW, Fab, Forex Pipper, Doug, Pegasus, Alexandros, Fabian, Carlos, Horace, Adinda, Beetle. Thank you, everybody. And I'll see everyone tomorrow. Adios.